Hey everybody, morning. My magnificent monsters, welcome back into the trenches. Got my caffeine of choice here. I want you to imagine something. All right, imagine having a money printing machine in your basement. If you got a basement. If not, maybe it's in the spare bedroom. It hums along, it does its thing, it prints cash. Now, imagine ripping out the guts of that machine, throwing it in the dumpster, and replacing that with server racks so that you could rent the space to a tech billionaire. Does that sound insane? I mean, probably does. Maybe it does. Maybe it doesn't for you. I don't know. Sounds a little crazy, right? Well, that's exactly what the biggest public Bitcoin miners in the world are all doing right now. They're basically dumping their crypto, dumping their mining machines, and rebranding to AI. And history tells us loud and clear that they're about to become the railroad bankruptcies of this cycle. So let's talk about why this matters, right? This isn't just a story about some tech companies making a bad bet. This is a $700 billion infrastructure trap, and it's unfolding in real time. The miners are funding this pivot by dumping an amazing 15,000 Bitcoins, which means the supply overhang in the market for Bitcoin it's actually real. But more importantly, the companies that build the AI infrastructure, they're probably going to get slaughtered. While the hyperscalers and the efficient, the private, the Bitcoin miners that hold the line, probably going to win big. If you're holding stock in these pivoting miners, you're holding on to a ticking time bomb. Hate to say it, but if you know how to play the shakeout, there's massive opportunity to short the builders and go long the ultimate winners, which it's probably just going to be Bitcoin itself. Let's look at the bloodbath of bad decisions here. Cypher Digital, formerly known as Cypher Mining, just did a full rebrand. They divested a 49% stake in their mining sites. Was that a smart idea? I don't know. Bitfarms, well, their CEO literally said, we're no longer a Bitcoin company. Though they did keep Bit in their name. Maybe for nostalgia's sake. IREN Limited just inked a $9.7 billion 5-year deal with Microsoft. TeraWolf, Hut 8, Core Scientific, Riot, Mara, CleanSpark, all of them are rushing to build out AI data center capacity right now. They went from just quietly securing the Bitcoin network to becoming glorified landlords for Microsoft, Google, AWS. And to fund all of this transition, they've dumped a combined $15,000 of Bitcoin off their balance sheets. Why are they doing this? They're scared. The industry average cost to mine one single Bitcoin right now is sitting at $87,000, down from like $100,000 not too long ago. The spot price says $70,000. Not too good. They're a little bit underwater. They're looking at their dollar-denominated quarterly reports, sweating bullets, and deciding to look for short-term gains. They're choosing the short-term lease checks from these big tech companies over longer-term horizon of the hardest asset on earth, you might say. But here's the kicker. It's not that mining Bitcoins is unprofitable. It's that they're kind of bad at it. Over at SAS Mining, They've got private clients running 100% renewable energy in places like Paraguay, Ethiopia, mining at Bitcoin costs of like $50,000 a coin, $60,000 a coin. And that's like a 10 to 30% discount to the spot price. The efficient miners, the ones that actually got their crap together and controlled costs, they're printing money. While bloated U.S. public miners are handing over their power contracts, their land, their infrastructure, all of it to these hyperscalers. We have parallels. We have historical parallels to this because we've seen this movie before. We know how it ends. Maybe you don't, but I know how it ends. I mean, we know exactly how it's going to end. We can rewind to 1870, the first parallel for this, the railroad boom. Everyone and their mother was getting into the building of a railroad business across North America. It was going to be the future. It was going to change the world, and it did. But the companies that built the railroads, they took on massive debt, over-leveraged themselves, and went completely bankrupt in the panic of 1873. You know who won? It's almost a household name, at least if you are in the stock market. J.P. Morgan. He swooped in, bought the bankrupt assets for pennies on the dollar, consolidated the industry. The consolidators, they're the ones who won. The builders, they got wiped out. Fast forward to the 90s. 1990s, this is. There was a fiber optic boom. Companies laid millions of miles of internet cable called fiber optics. We did this globally. And then the dot-com crash hit. A graveyard of fiber optic infrastructure companies went bust. Who won? Hyperscalers, who eventually came in and picked it all up. Google, Meta, they bought up all this infrastructure, all this dark fiber that had been laying there for years for pennies on the dollar. And now, welcome to 2026. The AI infrastructure boom and eventual bust. The hyperscalers have committed over $700 billion in capital expenditures this year alone. Microsoft, Google, AWS, they're spending like drunken sailors. But here's the terrifying reality in all this. The pure play AI revenue, OpenAI, Anthropic, Cohere, Mistral, Perplexity, combined, all of them combined, their revenue, if you're I guess if you're kind of easy with it, if you're generous with the numbers, $35 billion. We're spending $700 billion a year to maybe make $35 billion. $700 billion in committed capex revenue, $35 billion in actual money coming back in the door. Where's the other $665 billion going to come from? That, my friends, is what I keep pointing out is the problem. That's a 20-to-1 ratio. I don't think we're going to grow AI revenue 20 times. I don't think there's anything out there to grow AI revenue 20 times. This is where the problem is. It's a race to the bottom. Everything's getting cheaper. Everything's getting more efficient to run. China companies are putting out AI models that rival the best of OpenAI, Anthropic, Google, and they're giving them out to basically run for free. The miners, well, we're crypto miners. They're building the infrastructure for demand that hasn't even proven it can generate any kind of return to pay for that demand. They're falling into the exact same trap that railroad builders, fiber optic layers did in the past. So how do we trade this? How do you profit from the purge? Well, I got 4 setups you could potentially jump onto. Now, trade number 1, short the AI pivoted miners, and there may be some pain before it really starts dropping. But companies like Cipher Digital, Bitfarms, they're at their extreme risk, right? I'm looking, I mean, you could go after some long puts. You know, I'd say probably want to go later in the year, maybe out to the fall. You know, when Q1 earnings hit in April, the AI revenue starts missing the mark, they might start cratering. So we could see like a 40 to 60% decline from their highs if they can't pull the AI revenue that they've been promised. The infrastructure trap might snap shut. Now, trade number 2, long Bitcoin. You know, this is the regret phase trade. Now, public miners, they dumped $15,000 Bitcoins at basically the current bottom. The supply overhang is exhausted. Now, the efficient private miners, they're going to gain market share. When the AI pivot fails, the public miners might panic and try to go back. We could see a pop in the short term up into the $78,000, $80,000 area. Maybe this all kind of jives with the cycle I pointed out. We could see a rally up into the 90,000 area, maybe dip back off late into the fall, 30 to 50K, but then see it recover back to 100,000 if crypto winter plays out like we've seen in the past. So you could play through this spot Bitcoin. You could play with futures, you could play ETFs, you could play IBIT, you could buy FBTC. Coinbase is another proxy, maybe strategy, MSTR. Now, trade setup number 3 is long efficient miners. Now, these guys mine at $50,000 to $60,000, and they are real winners right now, even at this kind of price that we have. They're surviving the shakeout. They're still making money. If you can access the private miner equity, great. If not, you could look at renewable energy proxies like URA, TAN, because cheap frontier energy is the new gold rush, not just for Bitcoin, but AI too. The trade setup number 4, short AI infrastructure ETFs. Now, this is kind of a basket play. That $665 billion capex, eventually when the lights come on, the music stops, it's going to cause some pain. You can short data center real estate investment trusts that have short-term leases to hyperscalers, or even look at shorting regional banks exposed to AI loans like KRE. When the bubble deflates, the infrastructure providers, they're going to feel this. So look, I'm not trying to be all doom and gloom, but in 1873, railroad builders went bankrupt. In 2000, fiber optic builders went bankrupt. In 2026, maybe even 2027, Bitcoin miners pivoting to AI, probably going to go bankrupt. They were on a path to go bankrupt anyway. They weren't being efficient. The pivot just prolongs it. I said next crypto winter, I thought that we're going to see like 80 to 90% of the crypto miners go away. My targets are going to set Cipher, Bitfarms, IREN, probably going to take a spill. Bitcoin, we're probably going to see a rip and then a dip and a rip again. The hyperscalers win, the infrastructure builders lose. I make predictions that sometimes come true. See how it pans out. So moving on here. How do we make money today? Right? How do we make money today? Jumping over to this, all trading involves a substantial risk of loss, and past performance is not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, entertaining. It's not really a recommendation to buy or sell any financial instrument. 90% of traders lose money when they trade naively. So be careful trading stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade those things, you might lose money. If you want somebody to tell you what to do, what those great investments are, there's people you can hire for that. CPI came out this morning. A little bit of wiggle, but not much. A little bit of wiggle, and not much. Wherever that song is. Everything came in line, basically. 0.2 on the month, the core, 0.3 on the month, all inclusive, and 2.4 on the year. No real surprises here. I didn't think we'd have any real surprises. February was, yeah, this is the CPI read for last month, not for this month with the war. It's for last month when everything was kind of ho-hum, chill. So we do have PCE coming up on Friday. Tal says it's a better read. I don't know. It's probably not going to surprise anything either. Probably going to come in line. That's what they want. Preliminary GDP. Now that one could be a surprise. We'll see there. And some JOLTS jobs and consumer sentiment, all that stuff coming out on Friday after the open. The big show, you know, what's interesting here, we have VIX OPEX on the 17th. We have the big show, the FOMC on the 18th. Index, normal monthly, quarterly index options. Last day to trade on the 19th. And then a massive, I'm going to say like, it's going to be something like $1.7 trillion worth of options expiring on Friday. Right here. Got a big chunk of morning options and then a big chunk of afternoon options, all expiring on Friday. It's probably going to be the biggest OPEX in history. And it's only like 9 days away. What that does, it clears the slate for things to start moving. Now, historically, we kind of chop down in the market into this week right here, OPEX week. And then we rally from OPEX week into Memorial Day. And if you aren't aware of what Memorial Day is, maybe you don't live in the United States, that would be down here in May. So from the last week of March through near the end of May, we'll probably rally. And then you get that classic sell in May, go away, kind of get a summer doldrum. And then as we get to the end of the summer, we start into some more chaos in October, then rally into December, and then we put the wraps on 2026. Holy cow. Where did the time go? I'm already at Christmas, already at the holidays. So welcome everybody. Let's see what the audience thinks. Start a poll. Do we rally after the OPEX? Anonymous poll. You can vote if you want to. Almost 130 of you here, according to my little gauge on my thinger right here. So, see how many people can vote. And like I said, anonymous. You just click the button, click the thingy, and put your vote in. And looking at the overnight action, it's kind of benign last night. Not really doing much. Everything's just kind of chilling out here. We made that big dip yesterday, recovered back up, still lower high. And this is interesting because it's an accelerated set of lower highs. This can still dip down in here. Now we did break above this level. So we put the quash on the immediate bearishness, but that doesn't mean that we won't continue down. Could be a nested setup. Yeah, that 1-2, this might be a 1-2. And as long as we're holding this accelerated downtrend line, down can go faster down. My Tasty Trade platform just logged out. That's cool. Log it back in, just in case I want to talk about anything. Like I said, logged out right for the open, right after the open. So that's what we got cooking here. Another thing to be cognizant of, careful of. If indeedy do. This is another nested 1, 2. And we're going to see follow through. The 3 could be right down here. 4, bounce up, hold under that one. And then 5. And then we have to get the 4, 5 of that one. And that's how we end up with all these little permutations on a drop. Everybody always wants to know, what time frame do I watch? The one that matters is the answer. Right now, kind of watching these 15 and 30 minutes because that's right where we're messing around with the roadmap line. Even the 1 hour and then 4 hour has kind of been a ceiling here. Pretty firm ceiling. If you only wanted to watch one, watch the 4 hour. We break above it, probably going higher. As long as we're under it, risk is to the downside. Now, you may have never seen ES before. That's just S&P 500 futures. Why am I looking at that and not just the cash index? Because the cash index stopped trading at the close yesterday. There's no overnight action. We just stopped trading here and we restarted trading again here. That's missing data. Right here, market closed over here yesterday. Get it right in here. And we did this kind of up and down, didn't really, there's that CPI data coming out. As I told a couple of you, I didn't think it was going to be a big event. Didn't really do much at all. That's relatively benign compared to the moves of yesterday. I think we're going to wait for the FOMC meeting next week. I don't think they're going to do much on the FOMC meeting next week. Certainly can't cut rates. 2-year Treasury rate creeping up into the current Fed funds rate. They're basically the same. I mean, for all intents and purposes, 0.08 difference is basically the same. And, you know, the range is actually 3.5 to 3.75. 3.75 for the Fed funds rate. It's always a range. It's always a fuzzy zone in here. The blue, which is the 2-year constant maturity rate, Delta Golf Sierra 2, DGS2, that is actually inside the range, just barely. That means they can't do anything. I mean, they could raise rates. That would cause an absolute meltdown, and Trump would probably lose his proverbial shiz, sugar honey iced tea. But there's no room to cut here. If you cut, you're cutting below the market rate. That's dumb. That's led to, every time we've been in this situation, since I've been trading, every time we cut below the market, we lead to some sort of big panic. It's not usually good. And the risk you run is you cut, and then the 2-year constant maturity runs away, and then you got to raise rates, and then you look like idiots, and you lose credibility as a force that controls the market, and the illusion of the Fed comes into light. I don't know. They're not cutting rates. Not raising rates either, probably. Not doing anything, more than likely. But the market may hold its breath and wait for that. So right now we have this 1, 2, 1, 2 potential downside setup, and that's not too great. So if you want an alert when we might break higher, you can set you an alert up here around 68.50. If we start breaking through that, the next one up is going to be around 69.30. 30. If we start breaking through that, we're probably going on higher. But as long as we stay under those levels, down is the setup on the chart. NASDAQ, in fact, looks best if we get a lower low than we had back at Thanksgiving. Been like a parrot saying this every day, but this is the truth of the market right here. This pattern, giant correction, and we're just kind of holding in here. We need to flush this on down so we can go higher. Got too many people stuck, and I'm not sure if we can flush it before the OPEX or not. I don't know. It's a tricky situation. NQ overnight, just hanging in here, consolidating. Now the futures are they're interesting. We almost, but almost doesn't count. Almost got a lower low yesterday, but we're still not there. What's going to be the news cycle? Someone going to do something crazy in the Middle East? What's going to be the excuse to do the dip? The dip's in the chart. I just don't know how long we go sideways before we take the dip. The dip is in the chart. Russell potentially already dipped down. That was what we needed here. Now we need to hold here and go higher. Get back above this downtrend of highs. And we're set up for a visit of 3,100 on Russell. Now, if you're like, well, I don't even know what the heck Russell is or how to play it, IWM would be a way to play. And it'd be a trip up to this 305. It's not perfectly a division by 10. It's kind of like SPY is not perfectly SPX divided by 10. IWM is the ETF, kind of like SPY is to SPX or QQQ is to NASDAQ. IWM is Russell. If we get that bounce and that pop, kind of retesting here this prior high from back in 24, and the continuation would be right up here. Rejected off of the 1272, and the retrace back to the breakouts sets us up for the rally. Oil, on again, off again, on again, off again. This is doing, we did the first drop. We're doing the consolidation. What comes next? All over but the crying. This is the bubble pattern. Big crazy pop. Lots of euphoria. We're all going to be rich. Oil's going 1 million. Complacency. It just needs to cool off a little bit. We're going to pop it again. And comes all the way back. Just be careful. Probably going to drop. And it can sit in this consolidation up here way longer than you can stay solvent. We've seen examples of that, like this one right here. It's still basically in that consolidation cycle. Got that initial drop. We're doing this chop. Chopping, 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 chopping. And it's probably going to drop back out. When does it happen? And you could be like, well, if the consolidation was here and we did the drop, I think it has a bigger drop. It's cooking. Call me crazy. Back to it. Gold. Guess what? We've got a first move down off of this. So this was the big first move down back there in January into February. A, B, C, rally back up, hit an ideal level right there. Made an initial move down off of that. Made a 618 retrace. And it's basically like the table's set. We're just waiting on the guests to show up for the drop. I'll be very careful right now. And it doesn't have to happen. Right? This certainly does not have to happen. This can prove me wrong, and euphoria takes over and we go higher once again. But be careful. The table's set, the direction's picked, everything's set up beautifully for this next drop. What would be the excuse? I don't know. Don't really know. But we could get another big flush out right there. Bitcoin still has this. So this could be the A wave of this, and this be the B wave of this first big A wave up here. So looking for that to pop up there. Probably going to find resistance around 78, 79. Bleed it back off, 618 retrace, then pop it into May or June. It's kind of what I was referring to when I was talking about during the monologue here. We're probably going to pop it up here, probably going to pull it back here, probably going to pop it up here, and then take a big spill down into the 30-50 zone down here sometime in October. It's been outlined on the chart. We'll just see how it plays out. Ethereum not really doing jack. That's the way it happens in crypto winter. Dollar holding on to the roadmap line so far. If we break out through these highs and these highs and then these highs, it's gonna be game on to start shorting. Start short squeezing short dollar traders. Get all the words out of my mouth. So last year, the big play from the big money, borrow money and short the dollar. Short the dollar, make lots of money, short the dollar, short the dollar, short the dollar. Still shorting the dollar, still adding to the shorts. Oh, this little pop, we need to take it back. Down. Still shorting the dollar, still adding to the shorts. But if this starts getting above 102, this can turn into short squeeze, and we can take it all the way back to the top. Maybe even break it out of this downtrend, head up to 120, maybe 130, possibly even 140. You could play in currencies, Forex markets, or you could buy UUP. But right now, it's not doing anything yet. It's just the potential sitting here cooking. Sitting here cooking. We could pop it. Doesn't have to. We could drop it back out. The short dollar trade could continue on. Party on, Wayne. But starting to look a little sketchy. There's some big players starting to wonder if now is the time to get out. You can see these tails are usually indicative that bulls are losing control, but we're not making any headway on the downside. Could be that the tides are turning here. They're trying to short it, trying to keep it under wraps, but maybe they lose control here. Takes off against them. NKD, global liquidity indicator. I mentioned we may rally back up to that 57,000 area. Find resistance and then take the next spill down. That's kind of consistent with S&P and NASDAQ. Maybe gold. So be careful. Gold can suck down with the NKD. Big tech, Mag 7, Apple holding the roadmap line really well on the daily. Resistance is still the downtrend highs. Get above it. 295 is target. Amazon. It's looking like the bottom's in. Got resistance coming up. Gap fill and gap fill. These two zones in here. Got to get through to go higher. Got to get through both of those. Google. Watch out below. Meta has the setup for 1100 to 1300. May take a couple years. Higher lows. Big bounce off the 618. Nothing's changed. Microsoft still hunting for the bottom. Can't seem to confirm that that's it. May break down and go lower low than we did back on the Liberation Day crash. NVIDIA, just humming in here. Just humming along, churning along, holding support at the roadmap line. Got resistance right here right now. If we can get above that, we might go on for a new high up at 200 and then start tipping the odds we're going higher. If we reject right here, watch out down around 150. Yeah, my mouse is starting to be a little goofy. So we need to reload the page. Save it. Load it. Yeah. It's in the poll. So we could 73% going higher, 27% going lower. About half the people voted. Nice participation, everybody. Dun, dun, dun. And let's see. Let's do another poll. Today, the S&P, SPX closes green. Red. Let's see what y'all think. Today, the SPX closes green or red? Before we get to the actual predictions I make. So, NVIDIA has that resistance. That resistance coming up right here. 188, 189. Just a couple bucks above us. Remember, every dollar this thing moves, this is the craziest part of this thing. Every dollar this thing moves is like $25 billion, $24.3 billion. $24.3 billion flowing into or out of the market. If we're going higher, it's $24.3 billion flowing in. If we're going lower, that's $24.3 billion flowing out of NVIDIA. And think about that a minute. $35 billion. Think about this for just a minute. $35 billion. That's all the AI revenue. Like $1. A little, less than $2 of stock move on NVIDIA is all of the AI revenue for a year. Right now, across all the things. Messes with you a little bit. Big risk there. Tesla, still in the downtrend. Still hadn't really broken out of this funk yet. We're going to have to break through some highs to get some upside. Still got the downtrend. Still below it. If we get through, got to get above that. Confirm above the 618, which is all the way up here at 450. And then we set up the 520, 550, maybe even 600 up here. We did tag the lower low. It did not quite make it down to 370. That's still a risk, still in the cards, until we start breaking above the 618 up here. Still come all the way up here and still take a dive right down here. Netflix. So not really an all clear until we're up above like 450 on Tesla. Netflix rejecting off the roadmap line so far. Like, wow. That magic line worked again. Watch out for the retrace. Back to the 618 down here around 84. And I go pull gainers. Things moving $2 or more up in the pre-market. I go pull decliners. Things are moving $2 or more down in the pre-market. The list is pretty small today. And we hope for some opportunities. Unit first here. One big rip, nothing to really glean. Oracle, maybe we found a bottom in here. It's kind of a no man's land of nothing right there where we're potentially bouncing. So maybe we just overdid it. Drop down in here. We have that consolidation to beat, that roadmap line to beat, and then the bigger 618, which is not off the low, right? Come on, snap on it too. There we go. That 618 up there at 240. So we got stacked resistance. We've got that line right there. We got this coming down like this. And then we'll have this up here. Got to break through that one, this one, and this one before we go higher on Oracle. NBIS. Let's chop it around in here. Here's the high, here's the low. Oh, it already had one drawn on here. Pull it over to that low. And if we can get the close today above that 111, sets up 157.70 as the target for NBIS. Not too shabby. 2x leverage on NBIS. If you think NBIS is going to break out, grab some shares of this, ride it up. CF. And that's pretty elevated. Watch out. Bigger, longer term. Gosh, this is going to be like month long. And we didn't bounce off we didn't hit the monthly. Bounced and rode the weekly here. So actually, I did activate this trade all the way back here. Retraced again. Set for 131 as the target, maybe 142, but I'd watch out for the chop. Possibly up to 179. Starting to cook a head and shoulders pattern. Be careful. That's potentially topped. If we cook a shoulder pattern in here, and then we turn down, watch for an extension. First move down, retrace. I can put us right down here. And for those that have seen the head and shoulders before, could get even nastier down to 1618. And this is low price stuff, so be careful. CarMax has not found a bottom yet on the weekly chart. On the daily chart, we did tag this 1618. Did bounce off the roadmap line, working on the retrace. If we can hold the 618 retrace, break through the roadmap line, this may indicate that the woes of CarMax are nearing completion here. Now remember, the chart will make a bottom, typically 6 months ahead of news changing for a particular stock. Like earnings can still be bad. Everything can still be crap for a company for like 6 months on average. This could be longer, this could be shorter. 6 months after we make a bottom and we actually reverse, the news cycle on the stock can keep being bad, and then all of a sudden it started being positive, and you're like, well, maybe that was a bottom that happened like 6 months or longer ago. And so this is starting to shape up. I would expect it to dip just a little bit lower. That could be the bottom, but especially if we break above the roadmap line, back test the roadmap line, sets the stage for going higher. But no bottom in place confirmation yet, because we're still under this daily roadmap line, still going down. Look at how many times it's been resistance here. Resistance over here. Come on, draw. Resistance over here. Resistance right there. Didn't even make it there. Bounce off here. And we're still underneath it. MUU. SMX. Whew. Dumpster fire right there. I wouldn't touch it. Dumpster fire. That's just going to burn your money. Uber. I think Uber has risk. If they bet big on Joby, I could take a spill. Autonomous driving puts their business model in question. You'd be like, well, I don't believe in autonomous driving. Well, should go ride in a Tesla and let it drive you around. It's pretty freaking wild. Waymos are out there too. I'd watch out bet against that stuff. MUL, 2x long on MU, just like MUU. Looking at decliners, ESLT. Probably coming back to the roadmap line. AVAV. Thought that it made a low. Come on. Apparently not. Apparently we're going to extend that on down. Maybe to 152. Lumentum needs a retrace back to the roadmap line. Coherent needs a retrace back to the roadmap line. CIEN needs a retrace back to the roadmap line. Diamondback Energy needs a retrace back to the roadmap line. CTES. Wow, trading view being slow. There's potential that's the bottom, but not a fan of this price action. Gonna have to get above that 618 to prove this is the bottom. Otherwise, that can take another spill down. Palladium. We've had to dip on down just a little bit lower. Hold that low, turn back higher. That's what I want to see. SCCO. Back to the roadmap line. SLV. Back to the roadmap line. Got the first move down in here. And potential for a second move down. Back in the 50 area. Be careful. Warned about this a bunch of times. First move down, retrace. Second move down, puts us right down in here with the target zone. Coin. Resistance at the roadmap line on the upside. And maybe ultimately we go like this is starting to look like 1, 2, 3, 4, 5 down. LABU, roadmap line. That's a 3x leverage on biotech, which biotech is super dangerous. NEM needs to grind back down to the roadmap line at least. SIL is another way you could play silver miners. Probably needs to retrace the roadmap line. 2 setups I brought today. PAM. Bum, 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 bum. Pretty 50-50 on the going higher, going lower, huh? 50-50. So here's the high. Here's the low that the pattern would have picked up. That close above the 618 is the activation. There's the targets. 93.64. Stop is $1 below the low, down around 68. And statistics for this are irrelevant. Not a statistical population. We need greater than 30. So these numbers don't mean anything. The historic average of this pattern across tens of thousands of trades 75 and 1.2. There you go. STGW is the other one. There's only 2 of these out of all the stocks in the market. Only 2 kicked off an entry yesterday. Here's the high, here's the low. That close above the 618 was the entry. This is low price stuff. Be careful. Things under 20 are low priced. There's the target right there at 760. Stop is $1 below the low. The low is 430. That means 330. 330. Think about that. That's 25%. That's what I was gonna say. That's 25% lower. 25% lower. That really skews the risk reward there. So I would be very cautious getting into anything low cost. It's the trap of low cost tickers. $1 is a giant percentage. Like, well, it's affordable though, but it's higher risk than you might imagine. You can just go buy a share of something. So look at it. You're going for $1.29 pop versus a $3 risk. It just maybe not the best one to go after. And the statistics down here don't mean anything. 16, that less needs to be greater, 30 or greater for a statistical population. And then what do you glean from that? If the profitable trades are running greater than 75, that means that this ticker, if you have the population, then this ticker does tend to trend pullback continuation. Get the trend pullback continuation. Example of that. No, pulled up the wrong one. It's like Amazon here has 25. We're getting really close to 30. 92% profitable and a profit factor of 2.3. That's higher than the average. Walmart here. 69 examples of this. Runs a little bit light on the historical, but the profit factor runs really juicy. So when it works, it really works. Runs a little bit light on the historical pattern, 75%. But it has a lot of trades in the history. 69 right there. So you can kind of lean on these. It's 68% of the time it'll go. But there's no entry right now. We have to dip all the way down here to get the next entry. Anyway, I hunt through like 4,000 tickers every day looking for these setups. There's not much right now. And usually when the list is either really big or dead, we're about to make a big change in the market. The list is kind of dead with only 2 tickers. So be careful out there. Some big change is a brewing in the market. SPY. Let's kind of read the tea leaves of the market, see if we can figure out where we might end up today. Yeah, today didn't do too bad. I mean, yesterday we did pop out, but then we came right back down in the range. Didn't stick with the big gamma levels though. Pulling over to today. I'm sure this big, huge level is still sitting down here at 600. The SPY was pretty stacked through Friday this week, certainly into next week. So if you've never seen gamma, options gamma, it's hard to explain quickly, but when you buy an option, the market maker is generally the person that sells it to you. Or if you sell an option, the market maker is generally the person that buys it from you. And that creates market maker exposure, and then they hedge back out of the market. Now, when we're in green gamma, that means the market makers, when they hedge, they're trading against you. When we're in red gamma, when the market makers hedge, they hedge with you. As in, if the market's dropping, they're selling. When we're in green, when the market's popping, they're selling. All right, you kind of get it? So when we're in the green, the market maker's trading against you. So it gives it a hard time going higher. When we're in the red, the market maker is trading with you. So when we drop, it seems like why the drops are more violent, because the market makers are trading in our direction. Now, that's kind of the long and the short of how gamma works as far as a core mechanic in the market. I look for bubbles because big trading desks typically like to churn out people in the bubbles, and then the market makers kind of go along with that. Right now, there's not a lot of bubble right here. We got a few big levels, but there's no. This one stands out to me. $1 billion out here on the OPEX, the main monthly OPEX, down at 660. And that's why I've got that big line hanging out down there, 660. That thing's going to be sitting there till the 20th, basically. All right, I'll pull it over. Got that big level sitting down there, 660 through the 20th. Now, we could go visit that. And we could visit that anytime out through the 20th. That's something to keep an eye on. It's the biggest level on the board. It dwarfs anything we have today. So today, it's pretty benign. I mean, 170 million level, 140, 130. There's no big levels. That leaves the market pretty free to move. And the direction, usually we set up some sort of path to get down here. And there's not even 300 million out till Friday this week. We've got some big levels hanging out here. Now, there are players that like to balance this, though. A bunch of people can't be right in the market, right? So when you have a bunch of put buyers sitting down here at 660, you have a bunch of them sitting here at 670, the market doesn't like those people to make money. So we don't tend to just go down and drop and help them make money. In fact, look at that. We got a big put level sitting up here at 679. But we also have a big call level sitting here at 678. So that's probably 678, 679 is probably where we're going to go hang out. And looky, where we're hanging out right now. Kind of right at that 678, 679. I'm going to put it at 678.50. Rolling back to the heat map. This is like, you may be like, well, what are the rules to this? There's no rules. I watched this for years to try to figure out how this works. The heat map is relatively new. I haven't had that but a few weeks. Now we're starting to build up a little bit to 686. So I'm going to put my top of my level here right up here at 686. The bottom for today, probably 670 again. That's just because the biggest level today is 670. There's just not much below that. And then 686 is right kind of up there at the top of that big green bubble. What little bit of 4 levels is not really a clean bubble, but that's the best we got today. Looking at the Qs. Give that a second to load. Save this. Open the QQQ. Pull this over. Whole different ball of beeswax cooking on the Qs. Look at that. We hung right with that level yesterday. So the Qs does have a little bit more bubble forming in here, but it's not very big levels. And there is the biggest level on the board, still quite small though, 300 million. A lot of times late in the day, we'll see these up here at 700, 800 billion dollars. But Qs seem to be not the popular thing for the last 2 months for whatever reason. So somewhere in January, Q interest in playing the Qs kind of started fading, and we've seen smaller and smaller levels here. I'm sure it'll come back into favor, but right now it's just not the favorite. So we've got kind of a little bit of a bubble. It's not like awesome, but a little bit of a bubble up to 618. And then if you balance the same size numbers, it puts the potential down to 605. So that could leave us upside to 618, downside to 605, just a little bit higher than we were yesterday. And there's nothing saying that this has to stay in this box either. It's just where it looks like the options are telling us that we're going to hang out. Because market loves to churn off options and make a bunch of people lose money. And with a ridiculous level like that on yesterday, that's the 10th. I can't get rid of that level. It skews the whole thing and just messes it up. So you can't really, makes this useless. Right there. I don't know why they include yesterday's options in here. Well, that's annoying. So basically makes it impossible to tell anything about it. Somebody bought big at 610 yesterday, and probably lost all the money that they bought. There it goes. Finally, it peeled that off. Glitches in the matrix, I guess. And I try to balance the purple with the gold or yellow. Where might this kind of reach a balance point? I'm going to say somewhere around 608. It's where the chunk of puts and the chunk of calls kind of would both lose the most money. Somewhere around 608. So if the market wanted to rip everybody, somewhere in that area. So we may see this downside pressure a little bit. Even though we have those bigger levels out there today, we could run around in here and then end up back down here. Now, the caveat there is that the big chunk of puts and calls is out here on the 20th, not sitting here on today. Very relatively small level of options today compared to the $6 billion sitting there of gamma. And that's just gamma. That's not the value of the options. That's just how much hedging has to be done when it moves a dollar. So that's the tea leaf prediction. Look at the futures. I already kind of gave you the levels here on ES. We'd be needing a breakup of that 68.50. In fact, I'm going to put me an alert up there. And then up here at 69.50. Break above those, both of those. That's a big run too. That's 100 points higher. Break above those, probably setting the stage for bullish. If we maintain below here, let's take a look where might be the indication we're dropping. We're gonna get more flush, that low, that high. A breakdown below 66.80 is an initial indication we're going lower. So there you kind of go there. That would be indication we're going on probably new highs up in the 7,000s. 7,000 plus. And break down here, probably coming down in the 6,500 area. If not into the 64s. Or lower. And let's grab the futures. If we get back above, I'm gonna say like 25.4. Actually, I've got the alert right there, 25.5. 25.5, 25 basically. So if we're about 25.5, 25, we might have the potential to go back to the highs. As long as we're staying in here, break down below. And at this point, there's the low, here's the high. Clear some of the stuff off the last couple days. We break down below 24.4. Probably cruising. And I'm not exactly like on the point here because this move is so big. It can, with 25,000 points here, like you can move 100 points in a blink. If we get below that 24.4, it's setting the stage to dip on lower than the low we had back at Thanksgiving. There you go. That's kind of the levels and the direction and all the things there. Yeah, that big 618 level up there, and that should probably pull over just a little bit. Yeah, so still 25.5. Get above 25.5, probably going higher. Maybe up into the 26.7 area. But as long as we stay under that, once we break below 24.4, it sets the stage for getting that lower low. Down around 23,000. All right, everybody, that's it. I'll be on Market Masters 11:30. I'll be back here, same bad time, same bad channel, 9:15 tomorrow, hunting for opportunities, trying to figure out where the market's going to go. I'll be in Discord hanging out in between time, and in the meantime, we'll see you later.